To build anything that truly lasts, it takes time.
The comments which are coming from the US president that okay, looks like the deal are in place, but the US in a sense is very confident that the deal would be advantage US. So if the deals advantage US, markets are getting excited. Second, the Fed indirectly has said that look, if the tariff issues are sorted, then a rate cut surely is coming. So there is liquidity. Then that big tax bill has passed, which means there is more liquidity. So the bottom line here is that the presence or the view on liquidity in the system for financial markets now seems to be abundant, and that is really pushing financial markets higher. So the headline is that US markets, they continue to remain strong. Other asset classes are also in a good groove. You call the word consolidation for India, or you can use the word underperforming for India, but the bottom line here is that right now the anchoring effect for the market will come largely from global cues, not so much so from local cues, because this in a sense, I mean, while India on all parameters we can talk about okay, it's a good place, macros are great, but frankly the overarching theme for Indian markets is largely global in nature, where globally it's liquidity, it is concerns on tariff which have faded away, or the sheer weakness in the dollar index which is driving other asset classes higher.
Oh yeah, absolutely. It's a good 10% fall that the dollar index has seen in just the first half of 2025. Yesterday when we marked the closing of 6 months. Having said that, after the Senate passed the Trump budget bill, you've seen the dollar actually trim its losses, but it's staying below that 97 mark right now. So let's see which way things actually move. But yes, it seems like there is some stability at least coming into the currency markets. And like Nikunj said, it's really about what kind of inflows you're going to see, whether flows will continue moving back to the US equity markets, or will they drift down to emerging markets? And then where does India lie in that pool? That remains to be seen. Having said that, it's a decent handover that we've had from the US equity markets reacting to Trump's budget bill. At least the Dow managed to eke out gains for about almost 1%. It was a good 400-point move. Strangely so, that was not quite the case for the S&P 500 index or for the Nasdaq, which was down about almost 1%. Asia, not quite picking up on that sentiment. It's pretty quiet for Shanghai. It's marginally up right now for Hong Kong, but Japan is taking quite a knock. It's down about almost 1%, especially after Fed's latest commentary coming in. That said, back to our markets. We closed just about marginally in the green. It was largely a flattish session if you look at the index per se. Having said that, we continue to hold on to that 25,500 mark for the Nifty spot. Names like BEL, Reliance managed to eke out a 9-month high for itself. So some of these select stocks are the ones which are charging up ahead. And yesterday was no different. Some more upside for Geo Financials, which had an excellent last week. A couple of these banking names like a Kotak, etc., also managed to eke out gains for itself. But having said that, the breadth of the market wasn't all that great, and there was a large degree of large caps which were under pressure in any case. But one needs to see now with the recent global developments how money is going to move DM versus EM and how much India stands to gain out of that.
Sasha, the dollar index is at 96.5, and that in a sense is, again, I'm going back to that same point. It may sound repetitive, but this is a big trend and this is a big reversal. You know, imagine the most crowded trade at the beginning of the year was long-lived dollar. And that most crowded trade has not got busted, but that has reversed. And there are a lot of, the most crowd, I mean, that dollar index, let me put it this way, was the linchpin of how financial markets were moving. Everything was in a sense underlined with that. The movement in the dollar index is not leading to chaos, but it is leading to very sharp adjustment. The fact that yesterday the big tax bill has been passed, which clearly means that in the near term there is going to be more pressure in the US 10-year yields. If there is going to be more pressure on the US 10-year yields. That means the weakness in the US economy will be more and more pronounced. There seems to be for the first time a disconnect where US equities are up, weakness in the dollar index is getting more and more pronounced, the yields have gone higher, and equity markets are sitting at an all-time high. Normally you see the interplay between bonds and equities which tends to last longer. So there is a bit of a disconnect there, but because the underlying force of liquidity which is moving away from dollar to US stocks is so strong that everybody in a sense is mesmerized. What it means for India, I think more of the same. I think right now we will be governed by global cues for next few days until earnings will take over, and I think we are distance away from what will happen to earnings. So middle of the month, it would be earnings, it would be update on monsoon. But somewhere you cannot ignore risk right now, and I'll just point out two risks here which we should not ignore. GST tax collections have been very poor. That's a very high frequency data. It is in single digit. And the month gone by was not supposed to be a bad month. Why? Because monsoons had kicked in, rate cut had kicked in, liquidity had kicked in. So you got to ask yourself why. Why auto sales are not coming back? You could ask yourself why. Why discretionary pockets like FMCG and other categories are suffering? So it's not, it is all hunky-dory. Unfortunately, because of the global sentiment and because of the whole sheer presence of liquidity in the world, problems are getting masked right now. But I think this entire issue could create a shakeout for markets somewhere in middle of July, because that's where the realization of poor earnings would kick in. Today you get up in the morning, you see dollar index, you say, okay, US markets are going up, okay, FIs are buying, okay. So that okay, I think will get challenged somewhere in middle of July when you will say it is not okay.
Yeah, because that's when you will have the earnings hit hard. But anyway, Powell has confirmed that the Fed would have